Hi, welcome to our weekly Forex forecast. Good to be back. It was good to have the Thanksgiving weekend off, but we're back with you now. As always, we need to remind you that trading is a risky endeavor and not suitable for all investors. My name is Jay Norris. I've written a couple of books on trading, which were published by McGraw-Hill, and which serve as the textbooks for our courses at Trading University, where I am the Director of Education. First market we'll cover today in the weekly report, the Australian US dollar, Aussie USD. You know, this is a good looking chart from my perspective. Primary pattern up, secondary pattern up, day-to-day pattern up. Good looking chart that we'd be interested in buying dips in. So from a swing trader's perspective, short-term trader's perspective, this is an attractive market where we'll be focusing on dip buying coming into the new month, into December. Kind of has a sideways lean to it also. The important thing is that it came into that sideways market going south to north. So bullish long-term pattern. If you go out to the weekly, you can really see it at, same pattern really. You're sideways on the daily after coming south to north. Overall, you're sideways on the weekly after moving south to north too. So that's a pretty good-looking market. You know, they'll string it out sideways, but you still have that long-term bullish bend to it because the primary's up like that. Next market, we got to cover Aussie yen. Aussie yen is definitely your alpha market now, leading on the upside. Really good looking market. Those four critical patterns, those four influential patterns, all pointing higher. You pan out to weekly, and you really start to get some scope here. We think this is a market that longer term can eclipse the '07 highs. So there's a lot of room up above. We feel in this market coming back shorter term. We like this from on all time frames as a swing trader, day trader, even as a position trader. So we're liking this. We don't know if we'll be lucky enough to get a dip to buy. It's one where we can focus in perhaps on intraday charts as swing traders looking to buy dips. Here's an hourly chart, and you can see the dip buyers were rewarded here. So this is an attractive market to us. It's a bull market. Old Wall Street saying there's always a bull somewhere. Right now, the bulls are in these yen pairs, and we'll get to the dollar yen too and show that to you. Next market, euro US dollar. Here's one where I kind of looking ahead, a little guesswork. I'm thinking you may start going sideways here. Yeah. Technically, you did shift the day-to-day higher, but you sure didn't do it on good momentum. Not a whole lot of momentum. Very similar to how you handled right here. We had support from our day-to-day pattern here at the time, and it just kind of overran it on the 4-hour, but then the daily held, and then you had this uptick in this little rally. Very similar behavior here, where you had a short covering rally here, and it's running out of steam, but it just can't get a daily close above that 130. So we may be looking at the beginnings of a sideways market right here. You can see with the primary pattern down, if you're a position trader, you're still interested in selling rallies. This is a rally, right? As a short-term trader, a swing trader, however, with that secondary up and that day-to-day up, the short-term guys are still on the long side. So, this is one where buying a dip and selling a rally look equally attractive. From the perspective of a long-term guy, you'd be looking to sell the rally. Short-term guy, you're looking to buy the dip. So to me, that spells sideways. Other market we'll take a look at, pound dollar. A pound dollar is similar to euro too. I don't want to let these majors become distractions. I really think you've got some healthy markets in the yen pairs. I want to focus on them more. And I'm hoping that by focusing on these old majors like we do, I hope that doesn't become a distraction. Pound dollar, long overall, it's a good looking market. We'd be interested in buying a dip. We'd love to see a double bottom down to that purple line into the 58 handle. That's worth looking at. We'll have to see day-to-day down, though. So it's another one where this can be a distraction. Yeah, longer term it's higher, but shorter term it's lower. That spells a sideways market. That can spell a boring market, and you're going into December too. Now, there'll still be good trade for the next couple of weeks, but we get into mid-December, things will start to slow down. Let's look at the dollar yen, which is the big show here. Dollar yen good-looking market. Here's one where you have to pan out to the weekly chart to really put this in perspective for scale. I think that 2011, 2012 was the year that you finally bottomed in this market, and I think 2013, 2014 are going to be the years that you move potentially significantly higher. Even if you had a 50% retracement of this bear market from '07 down, that's going to leave you somewhere close to that par handle. So a lot of room on the chart. So don't just look at short-term daily chart and say, oh, that's an awful big move. It's got to correct or come down just as this one did. I don't think so. Sure, you'll have normal corrections. Perhaps you'll retrace that move, perhaps down some there. But overall, this is a market that you want to start focusing on. You want to get this dollar yen. You want to get the yen pairs on the front burner here because this is a bull market. The old Wall Street saying there's a bull market somewhere. You're looking at the beginnings of where the bull is going to be. So I think there are going to be a lot more traders. There are going to be a lot more folks focusing on this market in the coming year and even beyond. So we want to kind of get ahead of the curve and get this on our front burner and start analyzing and focusing on this market. Let's look at the stock market and we'll wrap it up. Here's a daily chart of the stock market. Healthy market, no doubt about it, healthy market. You can see how quickly it's recovered from that the November sell-off. This November sell-off really came because of the worry about that fiscal cliff again, the worry about the administration having to try and work with the Republican Congress again. You had bad news, then you had good news. It's right back where it started. My point being, you haven't gained any ground, you really haven't lost any ground. So this may be another one where we're looking for sideways price action. But, stocks don't go sideways for long. It's just not in their nature. You pan out to the long-term chart, and you can see you're almost back to one more leg up, and you're going to be at those '07 highs. So that's been a pretty good comeback. I'm thinking longer term that, you always want to have an interest in this market. You always have to follow the stock market. It's an alpha market, no doubt about it. It gives you good opportunities, too, especially in the U.S. Afternoon session when everything's kind of settled down. You've already established values, established your ranges. This will give you some nice trades in the later afternoon. But I don't think you can expect the upside that we've seen the last couple of years. I think that would be unreasonable to think that we're going to see these big rip-roaring rallies. So I think, it's kind of you could suffer the law of diminishing returns here. You're already starting to see a little bit of a divergence on the chart there with your momentum indicator. So I'm not sure how much. I think you will have long-term upside here, but I don't think you'll have the big rip-roaring rallies that we saw in the past. Again, it comes back to there's always a bull market somewhere. This has been the bull market the last couple of years, but I think it comes back to those yen pairs. Let me show you one more yen pair here off the. I'm always interested in this guy. Look at this market, CAD yen. There's a market with potential, a lot of room. So CAD yen, all the yen pairs, I think you need to have on your front burner as a trader. You need to move them from those top charts down onto the bottom charts right at eye level. You want to get in sync with the yen pairs. There's always bull markets somewhere, and these are, to me, these are just the beginnings of bull markets. We wrote about it in the Seeking Alpha blog. We called it actually the golden age of currency trading. I believe that, so I think you want to get on board with these yen pairs early and start focusing on them. Hey, always a pleasure. Good to see everybody. Here's the site if you want to come and check us out. You can go to Market Commentary, and you can see this video, other videos, along with some of the articles. Very timely in many cases that we've written, and that's all under Market Commentary. Under Education, you can sign up for our live market analysis, where you can come and see us on Mondays and Thursdays when we demonstrate the methods we teach in live markets. Thank you so much. Everyone have a great, safe weekend, and we'll see you next week.